Good afternoon, and today is October 4, 2023. It's a Wednesday, so it's a midweek, so it's a third trading day of this week, and this week is the 31st week, trading week of October. And let's see how it's, how the market is behaved so far, right? Well, let's look at the weekly table so we can have roughly idea. So we go to WW1, which stands for weekly, 1 week. So basically, hold on, let's move the week into 40. Right, we are in the one trading year you have 42 weeks, right? So we are I misspoke, 52 week, and right now we are at the week number 40, so it's 40 right there we have. And for this week, so far the range between high and low is $10. Let's see what the average is. Only $4, I mean $6, so it's more than the average, about $4 right there. Very interesting right there. But anyhow, you see this week is open low on the private close. So far we have 1, 2, 3, 4, 5. So we have 5 week low right there. So if this week gonna be a reversal, we don't know, but it reached some this level right here. Like we mark this is like you see all the consolidate right there, so the huge base right here. So let's see, that is on in terms of the weekly time frame. Yeah. Okay, so today we have a very wonderful price action or liquidity run. Almost any trade we play, it will be hit our target. It either hit our target or hit our stop loss, right? I mean, this trade right here, I think, let's look at the trade that we practiced today. Yeah, so here's the first setup we try to do. Okay, so here's the thing, right? So basically, we look on the 1 hour time frame, we see the total soup right there at the level. So 422 is our level for total soup. So as long as it's above that level, we go long right there, 422.29 right there. And right here is above 422. But the trick for us where we put our stop loss. So if we go with the 1 hour time frame, then we have to put our stop loss at this swing low. Right, Then let's see. All right, so we put our stop loss is between below the entry level, which is not correct. I'll take a look at the so this stop loss now we learn is not correct. No wonder you get hit, right? You see this stop loss get hit right away. At what time? 9:46, right? So we go in at 9:33 and we got hit at 46, so only 13 minutes, right? 13 minutes. All right, then the lesson we learn is that, what the lesson we learn? The loss stop too tight, right? According to the turtle soup set up, guideline, right? Stop loss must be at the latest swing low. If we want to go long, it has to be the latest, right? Low, right? So now let's look at the charts again, right? So what is the latest swing low, which is right here? So our stop loss should be here at 420.58. It will be the huge stop loss, right? Because we follow on the 1 hour time frame, so it makes sense that we have to follow. So we're going at 9:33, is that right? Yes. Look, so our stop loss is here. So basically our stop loss have to be 1 to 2, or I mean $1.87 right there, because we go by the 1 hour time frame, okay? Right, so our stop loss have to be that long. You see? Yeah, so our stop loss should be at the level 20 right here, at least right there, because we follow the 1 hour time frame. They should have a push stop loss right there. Yeah, then our target have to be at least 1 to 3 risk reward ratio right there. But anyway, we just practice this setup, so we still have a lot of time a lot of room to make an errors, and so we can learn. So I'm glad that we practice and we learn right there. So it's a huge opportunity for learn. Yes. So all right, too tight. Let's let it swing low. Yeah. Let's look at the. So here's the rule, right? And you stop loss right here. The stop buy, play initial, good until cancel, sell stop. Basically a stop loss 1 tick under today low, which is the newest low, right? Which is the latest low right here. Is that another word for latest low? And wait, where is the latest low, which is this guy? Well, way below the 20 right there. Actually, it's right here. I think maybe the 19 right there, right? So the stop loss is very wide. So if we trade on a 1 hour time frame, we have to follow on our the target on the 1 hour time frame, even though we go in at the 1 minute time frame. So that's so even though it's a huge stop right here, but we have to go a little more down there right there. And you can see that this stop loss is, fall into the fair value gap 1 hour time frame right there. But anyway, that's the lesson we learned right there about the stop loss for the turtle soup right there. Okay, now it's the second setup. Let me see. It is a short setup or long setup. Okay, so this is a unicorn setup, right? Because it's perfect right there. Huge displacement break this bearish breaker, right? Then the target gonna be at least retest this fair value gap right here. You see the auto block fair value gap right there. Yep. So we have to say unicorn retest short setup, so we can know that short setup. Target is the fair value gap on the sell side liquidity right there. H1 right there. Where's our 1 hour time frame? Okay, so basically if we short right here, then our target gonna hit at this fair value gap right there. We should go there. That's it, the very safe. But if you want more, you want until it hit this auto block, then a little bit tricky. In this case, you see it come back and take all your gain and stop you out right there. So this trade is have potential to be reversed back on you, right? Right, because right here you see the momentum that it's gonna reverse it back. If you look at the turtle sub, you can see that. So let look. It hit this stop loss right here at 10. I mean, not stop loss, but the target right here on this fair value gap right there. So around 20, altogether about 20. Yeah, and then target is at 10. Right, so basically our target is at this level, 2087. Okay, let's see on the 1 minute time frame how is 2010.7 right here. So we hit the target at 1024 exactly. This level is our target right there. I think let's do on the 1 hour time frame also. So we do compare side by side. This is the level we want, right? You see, it this target at this level right there, at this time right there. So basically we say targets 420 87 hit at 1024. Okay, so basically the short trade we hit a target right there, which is at this level. You see right there. Yep. We put a screenshot in there. Okay, now move to the next targets. I mean, today everywhere we look, we see the total sub setup, and it play out very well. I mean, it gives us another way to look at liquidity run right there. Beside ICT, you know, concept, order block, Fibonacci graph, retest, or you know, breaker, Fibonacci graph, and the DR model. So we have another tool in our arsenal, in our toolbox to help us to be better, right? To get better at trading. Okay, let's look at this total sub short setup. First, we look at the 5-minute time frame. Okay, so we take the screenshot right here. So right here you see a very beautiful setup. It's a total sub short setup, and I just want to recap. Basically, the total sub short setup is a 4 breakout, or you have another word, another name for that is called double top pattern right there, right? You see double top, one top, two top, double. That's another name for that. If you read some other literature, they say double top pattern, then you can associate or make a reference to the total sub short setup right here. And we will go short when it opened below the previous 20 candle high right there, right? So previous candle 20 candle high is at this candle that we mark at the number 1 right there, and we put the level at 423.28 right here, right? We mark that level right there. And the entry time on 5-minute time frame is at 9:40, and the stop loss is 5 minutes above the, I mean not 5 minutes, 5 cents above the 428. However, we just learned, right? We just learned from the previous practice trades, we should not put the stop loss above the entry level. We have to put on the latest swing high or swing low level, which is this candle, right? If you look at the note, the lesson we learned right here, we learned that, right? We put a stop loss at the entry level, right? But it turned out that this stop loss is too tight according to the guideline. The guideline from the total sub, the stop loss must be at the latest swing low. In this case, because it's long, so it's swing low, or or high all right, or latex, you know, swing low, swing high for short setup, right? Which is in this case, we do short run, right? In this case, it's a short setup, right? Then has to be a swing high right here. So our stop loss should be around above 5 cents swing high, not this the entry level. So this is the one that we need to correct this. However, in this case, it worked for us because it moved, you know, into our favor right away. And another beautiful thing about this setup is that it have a confluence right here. It tells you that, look at this. This is all swing high, right? It is the moving swing high right here. And right here, when the market structure is swing high, then you mark all the low. As soon as you see it break the first low, it gives you the signal that the market structure shift right there. Then don't try to chase the trade right here. It could create a fall breakout right here. If you chase right here, you get stop out. You have to wait for it to retest the previous swing high. And when it retest the previous swing high, then we have a set of turtle soup, and at the same time we have another, we have also a confluence with the ICT setup, which is the order block photograph, you know, retest short setup right there, and plus the market structure shift, which is it's gonna switch to the sell side liquidity right here. So this is a very high property setup because it have a confluence of three setup, right? You have market structure shift, we have a turtle soup, and you have a ICT, you know, setup also. Okay, let's look at the 1 minute time frame. So we check both on 5 minute time frame and how it looked like in the 1 minute time frame right here. So it also looked like you know, double top right there, but on the 5 minutes you see a little better, but for the 1 minute it have a more distance, but it still form a double top right there. So basically we try to capture both the 1 minute time frame and the 5 minute time frame, and we compare how it, you know, how it look like, how the setup look like from different time frame, so that can broaden our experience and our capability to detect, to identify the setup when it's forming. So that's an idea right there. And I think I did mention a little bit right here this morning the idea of buy side liquidity trap and sell side liquidity trap, and that call is volatile, you know, volatile cloud pattern. So VCB right there. Volatility cloud pattern right there. But in this case, it is short, so it's gonna go and break this sell side liquidity. Yeah, correct. It is break. That's sell side liquidity. Yeah, it break it. But as soon but right here it make a what? Yeah. So next time we see the pattern, likely it can form a fall breakout right here. Right, you see that? For breakout, that is the setup that we put right here. But now let's follow this trade and then we can see. So but basically we short from 5 minute time frame, right? And then I think, yeah, we short on 5 minute time frame. This is 1 minute time frame, and the target hit at this level, right, at 420.87. That's our target. And he hit it right there. But let me go back to the 5 minutes right here, right? Oh, okay. So the target at 420.87 because it's a London high. So we know that it's the very reasonable target right there, because that's one of the level right there. So that's the latest, the level is likely gonna hit, and that's the reason why as soon as it hit that level, we get out 1024 right there. And it turned out that that's a good decision because this is a fall breakout. And what is fall breakout? You apply the turtle soup long right here. Okay, so let's see what the risk reward ratio on this trade, right? You have a good short trade right there. Okay, so here's the 5 minute time frame, right? We go in turtle soup right here at 9:40 and we get our 1020. Under the 1 minute it's 24, but in 5 minutes it tell you the setup is when it hit this level it's 1020, or you either get out here or you can get out here. If you wait a little bit longer, you can get out on the 525 also. And it turned out it's great trade right here because it gives you a huge risk reward ratio. Remember, we make the decision to trade the trade not because we know the outcome, right? We don't trade based on the certainties because you will never know. We don't have a certainty because we cannot control how the market moves. We don't trade. We don't control the outcome of the trade. The only we control is we control our risk, how much we're gonna raise. And if the reward that better than the risk, in this case 1 to 7, then we just take the trade. At the end of the day, this ratio will help to make the money, not about the certainty. It's about a probability. So that's the thing that we need to ingrain in our brain, our subconscious mind right there. It helps us to make a better decision. Yeah, so when we see the setup in the future, we take the trade without hesitation or procrastination right there. So basically it's a good trade, right? You remember right here, we go in at 9:40 and then it hit the target right there at 10:20. So 9:40, so it's about 30 minutes. It's decent trade right there, right? Duration just 40-10, so it's about 30 minutes. Okay, now it goes to another beautiful trade right here. Look at this. Let me close all the swing sides for the trade that we just talking about, so we don't overload. Okay, so in this setup, right? So as soon as we get our short trade rate when it hits its level at 420.87, then we see that this is a fall breakout. So a lot of people are gonna go what? Because they say this level it broke, so they go in and short. And look at that, they got stopped out right away. So this is a fall breakout. And when you see that, the pattern like this, you apply the turtle soup right there. Basically, the turtle soup indicator tells us it's the new 20 candle low right there. And we mark the entry level right here and we put a buy stop. Remember, it's a buy stop, okay? it's different than the limit, right? The buy limit and buy stop different. I will go to detail later because it ran out of time. But basically, the buy stop is that right now the price is, just imagine right now the price is below the level you want to buy, then you put the buy stop. Okay, so when the price go up to level, you will get your order fill. That's the buy stop right there. But if you put the buy limit, then it have to be below the current price. That's an idea right there. The buy stop is also new to me also, because when I read the turtle soup, I understand right away that that's how they set up the trade, and I think it's beautiful. It gives you a lot of control right there. You only buy when the price start go up to that level. So it's kind of the opposite of the beginner like us, right? Normally the novice trade is do the opposite. They want to buy low, right? You buy limit. But in this case, they buy high. You see right there? They buy when the price go above that level. So they buy high. They don't buy low. And that's the reason why a lot of novice trade get trapped right here, because they try to buy low. No, I mean they try to sell low, maybe. Yeah. Yeah, so let's go back to and to follow up on this trade. So, and the target gonna be what? So when we enter and long there, our target gonna be at 930. So it's a very conservative target right there. You can get right there, and it gives you a very high risk reward ratio, 1 to 5. So basically we reach 22 cents and we gain $1.26 right there. Okay, I want to wrap up like I have another. Basically we have another 1, 2, 3 more trades to cover, but we ran out of time. So but you got an idea. I want to spend 1 more minute on this trade setup, right? So right after you see the volatility collapse pattern happen, then you know that's the last leg right there to move down. Then whoever go to short on this, we got stop out, we call it a fall break, and you apply the turtle soup rule or turtle soup indicator right now, indicator right here, and you can know that this candle is the candle you mark the entry. As soon as you see the price move above the level, you enter right there, because that's how the turtle soup set up, right? It said the new low of 20 candle, mark that new low, and you want the next low gonna be open below that, right? At least 4 candle between the previous low and the new low. So we have more than 4 candle. 1, 2, 3, 4, 5. So yeah, 4, 5 around there. Then as soon as we saw this one, we put a buy order right here. So that's an idea right there. Here the setup say right there. So 20-day low, in this case we trade on a 1 minute, so it's 20 candle low right here, 20 low, and then the next low will be at least 4 candle, right? So after the market fall below the 20 candle low, we placed an entry buy stop right there. Yep, that's an idea. So buy stop above this level for 2078, basically they say 5 to 10 ticks. So if we want, we play exactly or 5 cents above that. If it go up that, boom, it will carry our order and it go up right there. Remember, we do I buy stuff. It opposites of the buy limit. All right, I think we run out of time. We have a wonderful review, have wonderful price actions, liquidity run today. And talk to you later. Thank you for your time. Have a wonderful evening. Bye for now.